Hey guys, hope you guys are doing well. In this video, I'm going to teach you a very easy liquidity trading strategy that you can use, and this strategy is going to basically help you determine your daily bias or your intraday bias very easily, and also it's going to help you catch pinpoint accurate trades. Now, before I start the video, I just quickly want to let you guys know that I have been inactive on all of my social media accounts. I haven't been uploading as much as I used to on my YouTube. You may have noticed that as well. I have been totally inactive on Instagram and also on Twitter, and that is because I wasn't feeling healthy mentally. And just want to say that it happens to a lot of people. It's okay to feel down sometimes. You can't be, in a very good mindset 24/7. It just happens. So I might be back again. I am feeling better now. And I took a break from trading in December, and I just started trading back last week. So I took a long break. It wasn't supposed to be a long break, but it just happened because I just wasn't feeling good. And again, it just happens to the best of us. I wouldn't classify myself as the best, but it just happens with everyone. So this strategy is very easy. It's very mechanical, and it is probably one of the best strategy videos that I've uploaded on my YouTube so far. So make sure you pay attention, grab your coffee, sit back, relax, and take notes. All right, so let's get on with the video straight away. So first of all, I'm not gonna waste your time. First of all, what we have to do is look for a swing low or a swing high. So we're gonna use, my main time frame for this is 4-hour time frame and 5-minute time frame for this strategy, but I'm going to tell you guys other time frames as well. But for now, we're going to use 4-hour time frame to identify swing highs and swing lows, and we're going to take our entries on the 5-minute time frame. So when you are on the 4-hour time frame, what you have to do is identify a low or a high, right? So we have a low over here. Now, low consists of 3 candles and highs consist of 3 candles as well. This is the first candle, this is the second candle, this is the third candle. This is a low. A low is confirmed when the second candle is lowest than the first and the third candle, and similarly a high is confirmed when the second candle is highest than the first and the third candle, right? So what exactly is the strategy? On the 4-hour time frame, we want to wait for price to form a low or a high. So let's say we have a low over here. What you want to do is ignore the first and second candle and focus on the third candle. All right, this is very important. Now, what you have to do is mark out the high and the low of the third candle. All right, we're not looking at the second candle. We're not looking at the first candle, the third candle. Why? Because the algorithm, for some reason, it just prioritizes this candle. All right, there is liquidity above the high of this candle and liquidity below the low of this candle. So simply mark out the high of the third candle and the low of the third candle. Now, once you have that, you may not believe me, this is extremely easy strategy that I'm teaching you right now. Now, the fourth candle, right, the next candle that opens, you are waiting inside that candle. So within the next 4 hours, this pattern must occur. If it doesn't occur in the next candle, then the setup becomes invalid. So on the next candle, on the 5-minute time frame, remember now, once we have marked out the high and low of the third candle, we are dropping down to the 5-minute time frame. Now, on the next candle, right, 4-hour candle, on the 5-minute time frame, we want the price to either sweep out the high of the third candle or the low of the third candle. So let's assume that price goes up and sweeps the high of the third candle. Now, once price sweeps out the high of the third candle, we are simply looking for a market structure shift, all right, with a body closure. This is very important. We need a body closure. Now, there are 2 time frames for our entry. First off, there's a 15-minute time frame, and I sometimes use it when the market structure is not clean, okay, and there's a lot of noise. On the 5-minute time frame, you will catch entries, but the accuracy is going to be a little less. But on the 15-minute time frame, you're going to catch little small trades. I'm saying small in quantity, but the accuracy is going to be a little higher, right? So it really depends on you if you want to miss out on trades, right? Or you want to catch as much trades as you can. All right. I personally use the 5-minute time frame because it provides me with entries and I don't feel bad after missing out on a trade. All right. So the next step over here is we look for a market structure shift, right? And then we mark out the auto block over here. So it could be an auto block or a fair value gap. I personally use the auto block for this strategy. So let's assume that there is a auto block over here, right? So now what we are looking for is an entry from this auto block. And we put our stop loss right above the high over here. Now you could go for 1 to 2, or you can target the low of the third candle. So price swept the high of the third candle, and now we have the low of the third candle as our drawn liquidity. Now, as you guys know me, I always go for 1 to 2. I go break even at 1 to 1 risk to reward, and then I just take 1 to 2 and I just go on about my day. But when you get your entry over here, you can simply target as well. Now, it really depends on your risk management style and how much you can hold the trade. A good rule of thumb could be go break even at 1 to 1, take one partial at 1 to 2, and then try to trail your stop loss or hold till this low over here. It's literally that simple. Now, your entries, what I've seen from my data after back testing a lot, is you get the best win rate when your trades happen during kill zone hours. All right. Outside the kill zone hours, you're not going to get good win rate. But when your entry is within the kill zone hours, I promise you the trade is going to hit your targets most of the time. All right. And I know no one has taught this before. If I'm not, correct me if I'm wrong, but no one has taught this before, the third candle strategy. All right. You can call this the third candle strategy or whatever. Now, this is very simple. You take your entry, you boom and boom and boom. You are done for the day. One trade or probably 2 trades. Now, the beautiful thing about this strategy is it works on all pairs, assets, and also on crypto. So this strategy is insane and probably one of the best educational videos I have uploaded on my YouTube. And I promise you're going to benefit from this video. Now, there are some rules that you have to keep in mind. Sometimes price will wick, right? So the fourth candle will go above, sweep out the liquidity, but it will close above the third candle. So in that case, the setup is invalid unless you get a market structure shift on the 5-minute time frame. Then you can take the trade. But let's assume that price keeps going up, right? So let's just say this. Price keeps going up, right? And the fourth 4-hour candle, so this is the first, second, and third candle. The fourth candle, when zoomed in on the 5-minute time frame, it's going to look like this. But let's assume that we are still on the 4-hour time frame, and we are looking at the 5-minute price section here. So this is the 4-hour candle price section on the 5-minute time frame. So you don't get a market structure shift, and price keeps going up. And now at this point, the 4-hour candle, the fourth 4-hour candle closes, and you got no market structure shift. Then the setup becomes invalid, right? The goal here is to basically catch this type of trade. So let's go here. This is the third candle. Let me draw out another candle over here so you guys understand clearly, all right? So this is what it's going to look like. Let me just put it like that. All right, this should be it. All right, so this is what's going to look like on the 4-hour time frame. Price wicks above the third candle and then distributes to the downside, taking out the low of the third candle. So this wick right here on the 5-minute time frame is going to look something like this, right? So this is the open, right? Price goes up, gives a market structure shift, you take your entry, and boom, right there on the 5-minute time frame. This is what's going to look like on the higher time frame. This is what's going to look like on the lower time frame, and vice versa for longs, right? Or shorts. It doesn't matter. You can take shorts and longs on highs and lows, if that makes sense. So for example, over here, we have a high over here, right? And in this case, we are taking a long position. Why? We have the first, second, and third candle. We focus on the third candle. We mark out the low and the high of the third candle, right? And we wait for price to sweep the low of the third candle or the high. So in this case, the low of the third candle was swept. Now on the 5-minute time frame, we are looking for a market structure shift, right? We take our entry, boom, like that. So this is what it's going to look like on the 5-minute time frame, and this is what the fourth candle is going to look like on the 4-hour time frame. We have a wick, This wick is this price action, right? We got a market structure for entry and boom. So that's pretty much it for the strategy. Make sure you trade during the closing hours. I'm going to give you guys some examples and then I will end the video. All right, guys. So here is example number 1. And you can see right here, we have a low, 1, 2, 3. The second candle is the lowest from the first and the third candle. So the third candle is going to be our focus. So we want to mark out the high of the third candle and the low of the third candle, right? Now, we want to go down to the 5-minute time frame, right? And if I go back here, you can see this is the high of the third candle. That gets swept. So now we wait for a market structure shift right here. What do we have here? An auto block, right? So we mark it out like that, drag it along. Since the auto block is big, we can use the 50% for our entry. So this could be our entry right here. Stop goes right above the high over here. And if you see here, price give you 1 to 10 RR. Now it's not going to happen every time, but it is possible. Okay, let's move on to the next example now. All right, guys, so here is example 2. Looking at GBP JPY, we have a low over here. So we have one candle, second candle, and the third candle, right? So now we want to mark out the low and the high of the third candle. After that, we want to drop down to 5-minute time frame. So we have a high and a low. Let's see what happens. So price sweeps the high of the third candle. Now we want to look for a market structure shift, and it's going to be here. So let's see if it happens. And right here, what do we have? We have a body closure, and just above it, what do we have? We have a fair value gap, right? So now you could just simply target the low over here or go for 1 to 2. So if I put the position here, you can put your stop over here or even here, it doesn't matter. You can see it still gave you more than 1 to 2 RR. You can see the power of the strategy. When it plays out perfectly. So let's move on to the next example now. All right, guys. So here is another example looking at GBP CAD on the forward time frame, of course. And over here, what do we have? We have a low. This is the first candle, the second candle, and the third candle. So now I want to mark out the low of the third candle and the high of the third candle. Now, a bonus tip that I can give you right now is try to trade with the order flow. So when I open the pair or asset, and if I can identify the direction of the market within 3 seconds, then you have the correct order flow. But if you get confused, is it going down or is it going up? Then don't trade that pair. Okay. So over here, when I look at this price action, where is it going? I don't care about the old price action. Where is this move going? To the upside, right? So I just want to simply trade it to the upside. So right here, I'm anticipating that the low is going to be taken first. So let's go to the 5-minute time frame. And let's see what happens. So this is the high of the third candle and the low of the third candle. So over here, we swept the low, but we don't have a market structure shift, right? So we wait for it. And do we have it right here? Is this it? No, it's not that. So we will have to wait for this structure to be broken. And right here, you can see we have a market structure shift. Now we do have an auto block here as well. So that is going to be our entry. Stop can go over here as well. Doesn't matter. And we're going to aim for 1 to 2. As simple as that. So let's see how this plays out. Entry during the closing hour. So that is perfect. And trade still going on. Consolidates a bit. And when the HC session kicks in, you can see that price hit the take profit. And then it also probably kept going up. Yep, it kept going up. So you can see the power of the strategy, guys. Go ahead, back test it as much as you can. And I promise you, you will not be disappointed. And you can basically pass your challenges with this strategy and make consistent profits. I'm giving it all away for absolutely free. So I don't know what else you need. All right. If you want to join the Discord, private Discord server, where we have a community of over 2,000 people. And also if you want to learn my private videos, want to watch my private educational videos, link is down in the description, but it is not necessary. I'll see you guys in the next one. Goodbye.